If you've been looking at homes in Denver lately, especially in places like Cherry Hills, Greenwood Village, Castle Pines, Wash Park, or even parts of Highlands Ranch, you've probably noticed something. A lot of these homes are well above conventional conforming loan limits, as we say. One of the biggest misconceptions people have about luxury real estate is they assume the wealthy all just buy with cash, and that's not true. In reality, many high-income buyers are still financing homes, but just far more strategically. And that's where we come in to play with jumbo loans. Today, we're breaking down what a jumbo loan actually is, how luxury buyers are using them in Denver, what kind of income and credit you typically need, the biggest mistakes buyers are making, and why understanding leverage is so incredibly important in today's market. So if you're thinking about buying a higher end property in Colorado, this video is probably going to be something that you want to watch. Hi, my name is 𝐃𝐈𝐑𝐄𝐂𝐓. I am a Colorado real estate agent. I help clients just like you each and every day reaching out to me from this incredible platform, YouTube. I have helped over 100 clients buy, sell, navigate this crazy market in the Denver metro area, and I would love to serve you. If you're in need of my services, looking for a real estate agent to help you, please reach out to me. My info's down below, and let's get right into it. What is a jumbo loan? Let's start simple. A jumbo loan is a mortgage that exceeds conforming loan limits set by the federal government. In most parts of Colorado in 2026, once you move beyond the standard conforming threshold, you enter into jumbo financing territory. And in Denver's luxury market, that happens fast because realistically, a luxury home, say in Cherry Hills, a newer property in Castle Pines, or even a remodeled home in, say, Wash Park, can easily push clients and buyers into jumbo territory with the price point right off the bat. Jumbo loans are considered higher risk by lenders because the amounts and the loan amount is typically larger, and they aren't backed the same way that conforming loans are with like Freddie and Fannie Mae. So that means qualification standards are usually a little bit stricter. Many affluent buyers still prefer jumbo financing over paying cash outright because they want to be able to preserve their funds and be able to have something liquid on standby for all of the world's unknowns. This is something a lot of people misunderstand. Just because someone can buy cash doesn't mean that they ultimately should. A lot of affluent buyers think in terms of leverage and liquidity. So meaning they prefer keeping capital invested elsewhere instead of tying it all into the house and your mortgage, or the house, which is why you would pay cash. For example, if someone has money invested in, say, businesses, stock, commercial real estate, or other investments, they may prefer using financing strategically while maintaining a lot of their liquidity and all of the funds kind of at bay. So this really transitions into a lot of higher pricing homes. And another thing luxury buyers value is optionality and the ability to kind of take things as they can and at their discretion when they need it. So having available cash gives buyers flexibility when it comes to investing, renovations, business opportunities, or even quick market changes as things change, just like this volatile market we're in 2026. So that's one of the big reasons that jumbo financing remains incredibly common in Denver's luxury market and a lot of the higher priced homes in Colorado. So let's talk about qualifications, because jumbo loans and jumbo lending is definitely more documentation heavy than, say, conventional financing or even FHA. Credit score, let's talk about that. Generally speaking, the stronger your credit profile, the better your jumbo loan options become. Many jumbo lenders prefer 700 plus credit scores. Often this also transitions into better pricing, and they love to even see anything above the 740 mark and above, because lenders are taking a larger risk and they want to see a lot of strong financial management history, which is where the credit score comes in. Lenders typically want to see stable income, strong reserves, and manageable debt ratios. For self-employed buyers, this can become more complex because your tax write-offs often reduce qualifying income. So a lot of these things matters, and that's why many entrepreneurs end up exploring different options like bank statement loans, asset depletion loans, or even alternative jumbo structures. A big one though is really just bank statement loans, if I'm being honest. Touching on things like cash reserves, one thing many buyers overlook with jumbo loans is jumbo lenders often want reserves and they want to see cash in the bank. They want to see several months, sometimes even a year of mortgage payments or some type of cash available in savings or investment accounts after closing. So self-employed buyers, they want to see some type of money in the account, some type of savings. Down payment expectations. Contrary to what people think, jumbo loans do not always have to require massive down payments. Some programs also allow 10% down or even a lower specific scenario. But larger down payments can oftentimes improve your interest rates, your approval odds, as well as your total monthly payment and that flexibility when it comes to that. Touching on Denver's luxury market has evolved dramatically. So today's luxury buyer is often relocating from another state, coming from either California or Texas, selling stock compensation, or moving for executive opportunities, especially to Colorado. And moving here to Colorado, it continues to attract people who want potentially like a different lifestyle, more outdoor access, newer luxury construction options, and ideally privacy. So that's typically what our avatar of relocatees look like. Some of the biggest luxury hotspots continue to include year after year Cherry Hills Village, Greenwood Village, Castle Pines, Denver, and other parts of Littleton. And what's really interesting is many buyers entering these markets are highly analytical. So they're not just looking at the home, they're looking at a number of other factors, such as like long-term appreciation, tax strategy, leverage, as well as quality of life. So that's really why understanding a jumbo loan option, as well as the financing behind it, and it just ultimately just becomes so important while understanding all your options as a buyer. One of the biggest mistakes that you will find a buyer doing in today's market is assuming cash is always better. So sometimes buyers drain liquidity unnecessarily just to avoid having to finance another asset. But preserving cash can also create far more flexibility long term, and something that you should consider talking to your CPA about or even your accountant. So mistake number 2 when it comes to buyers in this market is waiting too long to potentially talk to a lender and exploring your options. So luxury financing often requires more strategy, more documentation, and more intention behind it, especially for people like business owners, stock competitive or compensation buyers, or even commission earners. Ideally, the earlier you plan and the earlier the planning starts, the smoother the process always is. I'm not even going to say like ideally, because this is just start planning. If you want to buy in 2026, 6 months ahead of that time period, you need to lock in with a realtor, a lender, as well as kind of an understanding of the programs, products, and ideal area that you want to move into. Mistake number 3, buying at the maximum approval, which I don't really see very often. So it does happen. For my buyers, not so much, because I always kind of role play with them, give them my honest opinion, and so does the lender. But just because the lender approves a certain amount does not mean that that payment has to align with your ideal lifestyle. Luxury ownership also includes things like taxes, insurance, maintenance, landscaping, utilities, and long-term upkeep of like these massive AC units to make a 10,000 square foot home cold. So just understand there's a number of different categories that come with purchasing in the luxury category. Some buyers may automatically default to 30-year fixed loan options when another loan structure may just be a better fit based off of their goals. So depending on the buyer, options potentially could look like an adjustable rate mortgage or an adjustable rate jumbo loan option, interest-only structure payments, or asset-based lending may make more sense to you. And this is why strategy just beats really just shopping that rate. Understand what you're buying into, what you're paying, and if you are going to have to kind of leverage potentially refinancing later in a couple years to be able to move forward, I don't think that's the best option for you. Just make sure your lender kind of gives you all options, jumps on a Zoom call with you, and is able to really create and structure the loan, the product, the program to your needs, your lifestyle, and your goals. Jumbo loans may not work for you, but I ideally see them working right now for executives, physicians, potentially entrepreneurs, luxury relocation buyers, and potentially just someone who would like to purchase at a really premium price in the Denver area. So especially in a market like we are in now, where the market is so volatile and changing, many affluent buyers are using financing because they understand something far more important. Understand that financing does not always have to make sense for you, and if you're wanting to pay cash, have at it. But I would say your money is far better stretched potentially at financing with a little bit of a caveat, potentially the interest rate being that. So if you're considering buying a luxury home in Denver, Colorado, or anywhere across Colorado, I would love to help you. Understand that jumbo financing may just be something that you would have to start planning a little bit more early in direct comparison to, say, a FHA financing or a conventional loan option. And the luxury market financing moves so differently, and the strategy matters even that much more. If you found this video helpful, if you are looking for more videos like this, kind of talking to what different price ranges, what programs, products, loans work best for different buyers, I would love if you could show this video a little bit of love, throw it a thumbs up. Don't forget to subscribe. And again, if you are looking for a qualified real estate agent in the Denver area, someone to assist you with your home goals, selling, investing, any of the above, I would love to be a resource. My info is down below, and I will catch you guys in the next one. Thanks so much for hanging around, and have a great day. Bye, guys.